Everyone, Paul here. Today I'm going to be going over a strategy. Now, if you have watched the last two videos I've made, I went over the strategy for crypto and I went over it for Forex and gold. But today I'm going to be going over the same strategy but using it for the stock market. The stock market, this strategy itself has its pros and cons. Whatever asset you choose is they have their the pros and cons, like crypto's open 24/7, Forex pretty much Monday through Friday. Same thing with the stock market. Stock market, there's key days that you got to look out for. I think like yesterday was a CPI data day, which I didn't really pay attention to. But anyway, you have to take note of when these dates are, these important, and when certain stocks release earnings and things like that. So with stocks, you got to be more aware of what's going on in the world. But other than that, I'm going to show you how to use this strategy to kind of help you make some pretty good trading decisions. It works really well. This strategy, you really only need 3 moving averages, indicators. If there's not really anything big going on and it's just a simple trading day, you can use this strategy for that. So let me plug it in and I'll show you how to benefit from using these 3 moving averages. Okay, so I also want to note that I also did make a video a couple days ago where I talked about some passive forms from the S&P 500. It's definitely worth looking at that video because you will learn 4 different ways that you can make passive income with trading just SPY alone. But other than that, let's kind of look at this formula here. And what you want to look for first is you want to load up your CMA trend bars here. You're going to start off with 9. So you want to go here to your indicators and you want to look for CM. It's right here. So it's in my favorites. It's by Chris Moody, but you'll have to look it up in your indicators. You're going to do 3 of them here, and you're going to have 9, 90, and 95. Now, if you've seen other videos of mine, I talked about the 90-95. The 90-95 basically shows you the overall trend of what it's currently doing. So the 90-95 helps you kind of figure out the overall trend so you know what to focus on. So with this strategy, you want to focus on the overall trend. So since the trend is up, because it's up from this point right here. So what you want to do is you want to focus on all the trades that are going up. So what I do with this strategy is I apply the 9, and I only do the 9. I only enter trades when the 9 crosses to the 90-95. And we see that happening right here. Sometimes it helps to turn off the candles so you see it better. Come in at the points when it crosses. So you see it crossing right here. So you could get in at this point right here where it crosses and do a call. But if you miss that call, the whole purpose of this is you get in on all the moments where the 9 turns green. That's why we're doing a color-coded EMA here. So the line is still above the 90-95, so we are still in an uptrend. Even though we have moments of where we go down, we are still in an uptrend. So you could get in for very brief scalps here. I mean, you literally wait for it to turn the opposite color, which is red right here, and you could get in from here to here and still be in profit. You take a little bit of profit here. Let's see if that's any kind of, I don't think this is a big profit, but you want to look for kind of bigger ones than this. But this does look like it might reach $1 difference. But yeah, try to look for longer, kind of bigger trades than that. You would definitely want to ride this longer than maybe an hour or 2. So you want to find those good moments. So once it crosses, and we'll find examples of it going down, But once it crosses, you see it happening right here. You want to focus on all the moments when the 9 turns green. So when it turns red, you need to be on alert, because if it changes color, that could be a good moment to actually get in for a trade. Because if you came in, you see it was red right here, around here, and then it put green again, and then you could have just rode out from here to here. You still hit some red over there, but you would still have a good trade right there because you're still bullish. So let's look at a couple other examples here. This couple times it wouldn't work. You see it crossing down here. So this is kind of a quick down and up. But I think this is the end of the market. Yeah, this is at the end of a market, so it's really, nobody would be able to get in a trade there anyway. So let's just look. You see it crosses right here. See, they cross, the 9 crosses the 90.95. And if you miss this cross, the next moment of getting in would be, you would see it goes red, and then you can get in right here. So we're going to see if this is a profit zone. See, from right about here to here, that's a $2 difference in price, so that is a profit zone. So let's just look at another example. Here we got red. So what we have is it crossing down. So this is a put right here. Let's turn off the candles, it's easier to see. So it crosses down right here. So what you want to look for is it to turn green and then turn red again. And you could come in at this cycle right here. You can come in this cycle right here. Or you can come in at this cycle right here. Now it's going to turn green to tell you that you should be getting out. I do this on longer time frames because I think it works the best. It will not work as well on a shorter time frame. But let's look at a couple other examples with SPY, and then we'll look at some other stocks. Now we see a big moment right here. We see it crossing right here, and you could have missed this entire time. And what you need to look for is it to go red but then turn green again. So we see that happening right here. And then we see a big move right here. Turns red right here. We see a move right here. And we see a move right here. So there's a lot of good moves that you can do in between this if you miss the big cross. So we can get in. Let's just do a couple of these. I think it was right about here to here. We'll ride this out. So yeah, that's a good run right there. So let's just do this one more time with SPY. And let's turn off the candles. You can see it better. So you see it crossing right here. And so if you miss this, the next spot would be wait for it to turn green and then turn red again. And then you can get this big one right here. But as soon as it turns green again, that is a good indication that it's shown the strength and to get out, basically. So you follow it as long as it stays in that color. And it works the best. So anyway, let's look at some other stocks with the strategy. Let's look at MicroStrategy, which is connected to Bitcoin. So let's just look here. Now let's look. Now, if you did an option contract for MicroStrategy, it's very expensive. What I would do is I would focus on all the moments where it goes up and just focus on getting those big percentage gains if you're doing MicroStrategy, because the contracts are really expensive. But let's just do it anyway. Right now, with that mindset, let's just focus on all the moments where MicroStrategy is going up. So we see it crossing right here, and if you could have rode this entire thing out and had a lot of profit, but you know, this still would have been a lot of money if you were doing options. But if you rode this out just regularly by buying and selling, you would have been looking at a 41% gain here. So let's just look at a couple more moments. See, so we got down, it crosses here and it goes down. You profit a little bit on that on the way down, but you can only do options with that strategy. Here's a brief pump up. Let's just see how much that would be if you did options or just regular trading. Right about here to here, you were looking at a $22 difference in price. If you did options, you would have made about $2,000. If you just bought and sold, you would make 4%. So here's a big move down. Now, the only way you would have benefited on this trade if you did options, and you know they're expensive, but you see it. Where'd it go? It crossed right here, and let's just remove the candles so we could see it better. So you could benefit from here to here on a put, or here to here on a put, here to here on a put. But contracts are expensive. The only way to benefit from this would have been to do options. So let's just I'll look at a couple more here. We see it crossing here. So you could do a call here if you did a call for around 332 or something like that. You could route it up here to here and be in profit. You could ride it from here to here and be profit. Let's just see how much this would be. And if we rode this here to here, this is 33% if you just did a regular day trade of it, and it would be, this is $111 difference in price, so this is, that's a lot of money if you were doing options. So let's just look at some other stocks. Let's look at Nvidia, because that's a popular one. Here we go, Nvidia, and we look at Nvidia. And Nvidia seems to be really pumping, so anyway, so we see Nvidia, it crosses right here, and you zoom in here. Now, Nvidia looks very bullish to me. It is crossed here, and it has not crossed down for a very long time. It might be heading down pretty soon, but all you wait for is the cross. You see it cross right here, and you could rotate it in. This entire would be gains, and let's just see how much that would be if you got in on the cross and you rode it all the way to about here. That's about $59 difference in price in 5 days. So let's turn off the candles. And you can still get in from, there's a little pullback right here. It turns green again. You can get in from here to here. And as long as it stays above the 90.95, you are still bullish. If it crosses below the 90.95, you're bearish. So this is a quick scalp right here. And this is a good profit zone right here. And then here to here is a good profit zone. So this shows you good moments of getting in and good moments of getting out. But like I said, this is the stock market is controlled by a lot of reports. So you got to keep your eyes open. You got to know when the CPI reports are coming out, when there's earnings coming out. I try to stay away from those days and just try to focus on all the days when it's not happening. Like yesterday, the CPI came out. I didn't even know about it, and I got stuck in a trade. But anyway, let's look at a couple other times here. Okay, so that's Nvidia. Lately, I think Nvidia is having some earnings come out pretty soon, so I think that's the reason why it's pumping so much. But let's look at one more stock here. Let's look at one more stock. Let's do AMD. Let's do AMD here. So with this strategy, you look for the cross. It's crossed right here. And you can see you could get in this entire moment right here. It hits red, and then you wait for it to come back green again, and you could get in, and all this is profit. So for moments like right up here, it turns red, and then it's briefly green again, and then it comes down. So it can fake you out sometimes. So you have to be cautious on these. There might be some fake outs on some of these, but you see it go red right here, and then you come in right here to here, and you can get some profit. So what you do is you look for it to cross either up or down, and if it's going up, you focus on all the moments when the 9 is green, and once it hits red, you know to get out. And when it's green again and it's on the up, it's already crossed up, that's what you want to focus on for profits. You never go against the trend. Never go do these little red moments when you're going up. You always go with the trend with this strategy. But anyway, that's this strategy. It's only using 3 moving averages, and it's very, very powerful in my opinion. It's very powerful because if you understand the right moments to get in the stock market can benefit in your favor. You just have to pay attention. You really have to pay attention to the earnings of companies and CPI reports. And sometimes when I'm trading, I focus on trading and I don't really pay attention to the CPI reports or earnings and things like that, and kind of screws me up sometimes because I don't pay attention to it, but I need to start doing it. But anyway, if you're doing stocks, make sure you pay attention to CPI reports and earnings. And on those days, I personally do not trade, or I try not to trade. But other than that, I follow this formula, and it looks like it works really well. Anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.